Pleased to have a great set of people in my panel here. Yesterday we discussed about how blockchain is going to transform the way we exchange value. And today we'll talk about, what exactly is that value all about. So tokenization involves putting something of any kind of asset of value onto the chain. And in this discussion, we'll look at different perspectives of each one of you from the tokenization aspect. So I want to get started right away, and maybe you could make your introductions there as to what tokenization is for you. Linda, let's get started with you. What exactly tokenization is for you, and how does it kind of impact your business?
Great. Thank you so much for having us here. It's wonderful. It's actually my first time in India, so I'm having a wonderful time, learning about and connecting with all the amazing ecosystem founders in Algorand. So a little bit about myself. I spent the last 15 years actually living and working in emerging markets, always focusing at the intersection of public policy, economic development, and technology. I started my career in travel and tourism policy, then went into foreign direct investments, which I think we will also touch on this panel. And then I also worked for the last 6 years at the government of Dubai, really working on developing the tech ecosystem, and actually that's how I learned about blockchain use cases for the public sector. I then ventured back into travel, because travel, I've always been fascinated by the incredible and remarkable power of this sector as a development tools, especially in emerging countries, to really drive employment from the bottom up. But as we know, pre-pandemic, especially travel was 10% of global GDP, 1 in 10 jobs. Cultural travel is like the fastest growing segment, 40% of total sector, but actually not everyone knows that the travel and tourism industry is also incredibly extractive. It is estimated by the United Nations World Travel Organization that every $100 that are spent on a tour holiday, only $5 actually stay in that country when that country is a developing country. So who's travel actually working purpose of? And on top of that, we learned, during the pandemic that is also not very resilient to things like pandemic or climate change or conflicts and so on. So during the pandemic, I spent some time in Indonesia, and I kind of directly faced on the ground how the lack of tourism dollars dramatically affected the livelihoods of a lot of communities. And when in 2021 I started seeing the remarkable adoption of digital assets, especially in the digital art space with NFTs, we started speculating on this idea of like redefining travel by creating a new model specifically focusing on regenerative tourism, but also with a big focus on cultural heritage preservation, by creating Quantum Tempo, which is really driving and putting the value chain of travel on chain by unlocking really interesting use cases that hopefully we will be able to share. But in a nutshell, really enabling travelers to access curated cultural experiences that are mostly driven by community-based tourism initiatives in many countries around the world. We also work and empower crafts community and artisans by tokenizing their physical products with their digital counterparts so that they can guarantee the authenticity and the provenance of their works in perpetuity. And we're also doing some really interesting activations around geolocating collectibles around points of interest and heritage sites that maybe tourism boards would like to promote, and therefore kind of unlocking new income opportunities for communities around the world in a way that is more transparent and regenerative. And then finally, we also provide that transparency to the travelers, because the big opportunity is with regenerative travel and this rise of impact, I think in many aspects of consumer, is to actually redefine relationship for travelers by educating them about the impact that they can leave behind in destination. So we're almost like enabling traveler provide this travel, we're enabling traveler leaving a travel legacies in many destinations, and blockchain kind of enables that transparency.
Very interesting. So tourism, tokenization of assets, it's just very interesting. So, just to be able to fair to be people who are sitting very far away from me, I'll probably go to you, Tanvi, and ask you about how tokenization is done in UBS and what exactly. So Tanvi is from UBS, and maybe you can talk about what you're doing there.
Oh, thank you, Nikhil. Glad to be here. I tend to spend most of my time with investments and high net worth individuals and clients being part of UBS. So it has been very heartwarming yesterday to see so many impactful use cases, which is touching the lives of millions. And I'm a New Delhi born individual, so coming into New Delhi after 5 years and seeing the entire ecosystem of this technology making such an impact has been really wonderful so far. So thanks for having me at the session. I have about 25 years of experience working for big corporates, specifically private banks, investment banks. I've got a long stint with Credit Suisse and also now work for UBS. Most of the time I have spent is on artificial intelligence and data. And so right now when most of the people are making a switch from AI to blockchain, I have done a little bit of a reverse. I'm now responsible and head of digital asset technology for UBS. So there are tons of use cases that we work within that space, but having lived in Switzerland for 12 years, and as Sandra mentioned in her previous panel, it's one of the more concrete and much more warmer when it comes to regulations. I can speak a little bit about tokenization in general, not just UBS, but what we have been doing in the space. So for us, tokenization has been about structured products, and the concept there is not to touch very many people, which is what we are talking on this panel today, but being able to streamline the long processes and the provision of certain structured products as it reaches the clients to be done within the day from its issuance rather than the 15 days of the operational challenges we have to deal with. And we're very proud to say that in the last quarter, we have been able to successfully create a production-ready environment for tokenization within the bank on public Ethereum, which is usually not the case. People go into private blockchains. So we are experimenting with public blockchains. This issuance has happened through a third party in the Bank of China International. We were just talking how comfortable Hong Kong is getting into the race. So we've been able to do that end to end. And interesting enough, this marketplace is really good because all of the additional issuers can then touch the wealth management clients that we have a plenty of. Other than that, which is the big ticket item, $300 million month on month is the penetration of that work. We've also been fractionizing gold, which is pretty interesting. So food is expensive in Switzerland, so the fractionization has come to a point where if somebody brings in food from home and want to spend that money into investment, they can invest in gold. So we fractionized gold to that level, and it's been pegged against the gold that the bank holds. So that's another use case which has touched the retail markets since we operate a domestic bank in Switzerland. We tokenize wine. I think one of our panelists was mentioning that perhaps would be the most interesting use case for many people here. So I get a lot of gifts in tokenized wine, but like in a sense, it's really helpful, contemporary to what we had seen with a lot of weavers last year, that you can now look at the provenance of where the wine is coming from. And it gives a lot of value to a lot of these vineyards, which are much smaller, to get their respective value. And countries like Georgia, who are not very well known for wine, can also stand in a chance against wine from France or Italy, for that matter. We've been fractionizing and tokenizing watches, which has been interesting. Luxury watch is not a segment every individual can participate in, but now second-hand watches and the fractionizing of Patek Philippe or Rolex has been on the platform. We've been tokenizing real estate for a long time. We can talk about the challenges of how to scale such a thing further on in the panel, but every set of asset, and I think the most interesting one that we should elaborate a lot more on is the fractionizing equity. Only 1% of the companies in Switzerland are on the public exchanges. The rest of it are privately held, and the money is just coming in from the VCs or the private equity. Now there is a platform, it's Action or Art, a very popular platform. There are a lot of companies have put their shares on, and very recently we have seen one of the private banks actually fractionizing their assets.
So we'll get into the fractionalization aspect in a bit, But there's one thing that I picked up from your, from what you were talking about was the public Ethereum. Maybe we can help you get into Algorand, and that's where I'll let Saurav talk about his product, Tokenize, from the, what exactly he's doing. So Saurav, could you please talk about what you're doing?
Thank you, Nikhil, and very grateful to this amazing panel and to Algorand specifically for giving me the opportunity to be here. So I'm Saurav Raj. I come from a technology background. I'm a pass out of IIT Delhi, right here on the other side of the city as well. Passed out in 2004, and I went on to work for a company called Schlumberger in the oil and gas services industry. Moved around quite a bit, and at a certain point of time, I decided to switch to technology. And like Tanvi said, there's a choice between AI and blockchain, and I picked up blockchain many years back. And quite along the journey, I was fortunate enough to discover Algorand, and thanks to Algo Bharati, Manil is here and Nikhil is here. And like I was telling Stacy yesterday, Algorand gives you superpowers. And today, I definitely feel I have some superpowers when building on Algorand versus the Ethereum or the other chains in that matter. So cutting it short and coming to the topic of tokenization, that is where we rebranded ourselves to say we are tokenized, which means we tokenize assets. And the question which you posed, what does tokenization mean? So if I were to put it out in front of people, tokenization for me means two things. One is, what is the asset? And that is where it is a bit of creativity. You can curate an asset. You can define what the asset should be. It can be a wine. It can be watches. It can be food. It can be carbon credits. It can be even tourism. So you have to have that amount of creativity to define what your asset could be. It could be a chair, or it could be this entire hotel. The second and the other critical component of what you do with tokenization is to define the economic model, right? And the economic model has two parts to it. One is, how do you get money in for that asset, or if you're collecting money, if you're fractionalizing, if you're distributing the rights, or if you're distributing the participation to a larger piece of audience, versus in some cases you may not, it only goes to institutions, then it's a process, versus where you democratize it. So that's one. And the other part of the mirror in that aspect is, how do you distribute the returns back to the original benefactors of people who have come in? So for me, tokenization as a whole means what the asset is and what the economic model sits on top of that. The way I see tokenization, it's one of the underlying and foundational technologies built on top of a blockchain protocol. It has to be very efficient to be able to do that, which is where Algorand comes into the picture. And the other factor, which if many of you don't know, it's a green blockchain, which is very relevant, right? Once you do that, then I think a blockchain protocol as Algorand is as good as a PHP or a JavaScript, using which you can now creatively build across multiple domains. And I believe my other panelists will speak on that. So over to you, Nikhil, and thank you.
Thank you, Saurav. I think Algorand is something definitely that you should consider. And maybe I'll let you talk as well, to Vandana, to be able to talk about what you're doing in the Algorand platform and what exactly are you tokenizing in Evident Finance.
Thank you. Thank you so much for having me on this panel. Always a pleasure to be on stage with Algorand. We are an alumnus of Algorand, I would say. We won the pitch competition the last time you guys were here. So very fortunate. Let me start with my introduction. I'm Vandana Jain. I head emerging markets investments for Evident Capital. I have been in fintech/investment space for close to 10 years across Hong Kong, New York, and now in India. I come from a mix of tech plus business, I would say. I was in traditional finance till last year. I was working for a hedge fund. I've been with a VC. I've been with an investment bank, with a startup. I've been everywhere, both in public markets as well as private markets. Having lived globally, I feel blockchain is a good connector for various countries. Now, with my role at Evident Capital for emerging markets, I feel blockchain plays a good bridge when you want to deploy capital from developed countries to developing countries. It's a fantastic bridge. Talking about Evident Capital, we focus on asset tokenization. We want to reduce the gap between rich and poor. This can only happen when you have access to capital to developing countries. So there are two aspects to it, right? One is access and the second is adoption. Access can only happen when you can give the regular retail mass access to high return, high quality assets, which has traditionally been concentrated with the top 1% of the population. So that is where blockchain comes in. And second is adoption. Adoption means there has to be some sort of liquidity for people to be able to enter and exit the assets. That again happens through blockchain, which was traditionally not possible. We are trying to deploy quality assets across carbon credits. We're talking about funds which are focused on sustainable finance. We're talking about green bond tokenization. This is what Evident focuses on. And we'll get to the second phase of it with Nikhil. Thank you.
Sure. So, like, the first phase that, we can say is tokenization, tokenizing assets to be able to bring it on the chain. But then, this whole idea of democratization, to be able to provide access to these tokens, to be able to make sure, we are able to reach to a wider audience that we were not able to reach. And that's probably what blockchain brings in, and that's the discussion. The next level in tokenization that comes in is fractionalization. Now, it is a complex phenomena. Fractionalization of certain assets are not possible. Maybe in tourism industry that might be difficult. Maybe in digital asset ownerships, maybe to do succession planning, that could be something that we could look at. But from the perspective of fractionalization rather, what are the things that you see? How are you fractionalizing? What is the mechanism? Is there a technology that is actually helping you? Is there a regulatory framework that you're looking to, that you need to abide by? What are the different things in your different avenues that you're looking at currently, please? Vandana, we can start with you.
Thank you. So how we are tokenizing. So we are, if I just talk about Hong Kong and India, this is where we are based. So India is a very solid country right now when it comes to youth population, talent, quality assets, high returns. We have been very resilient to global shakedowns. Now, what we are trying to solve through Evident is Hong Kong being a hub of family offices, we are driving foreign direct investments, enabling MSMEs in India, which is typically the backbone of a lot of developing countries. And we are trying to replicate the same across other emerging markets. How we do that, part of it is, of course, regulation. There has been a lot of scams. Thankfully, we are regulated by Hong Kong SFC, and we are trying to do something similar with India as well. Good thing with India is, so if you don't know, the gift city that has been set up by Indian government, they have a unit for asset tokenization. So we are trying to enter the regulatory sandbox and figure out if we can, in a regulated fashion, do the same with domestic investors, domestic MSMEs, and open the doors to all these very beautiful assets. They typically lack access to funds. Mm-hmm. A lot of impact funds are looking to deploy capital in emerging markets, and we are trying to solve that. Part of it is, of course, how do you set up the entire structure as well? So blockchain enables that beautifully. Earlier the fund tokenization was not really possible. Now with blockchain, what is happening is there is a lack of, there is an access to transparency, which increases confidence and trust with retail as well as the investors. So it's just beautiful how blockchain solves the whole, resistance towards deploying capital into these assets which were earlier not available.
Thank you. So when we talk about assets, sort of, what exactly are the assets? Are you looking at some assets which you are fractionalizing right now, and what are the challenges that you're facing in those assets?
Right. So we have picked up one of the oldest asset classes in the entire human history, that is land or real estate, right? And if I just take a poll around the room, I mean, how many of you have invested in real estate at any point of time throughout your careers? Raise of quick hands, right? Was it difficult? Was it easy? Very, very difficult, right?
Always
very
complex.
difficult all around, right? So that is where we picked up. We said, okay, this is a big use case. It's not easy, right? But let's get into it, right? Because like Vandana said here, blockchain. The promise of blockchain is technology-mediated trust, right? When you cannot trust the other party, when you cannot trust who you're buying it from, who you're selling it to, you have to depend on someone else to be able to do that, right? We have mechanisms like regulators, registries, all of them there, but there's always a human element of error, and there is a challenge of process and time, right? Now, if you want to execute, I mean, these are investments that you want to do, right? So we picked up an asset class which is real estate, right? We have looked at different categories of real estate, starting from a piece of land to a residential to a commercial unit, right? And then there are several things which start to come and take shape here. One is fractionalization, where you kind of break into smaller pieces. Now, together individually, I don't believe every one of us could own this entire hotel, but if we come together, maybe we could, a certain piece of it, and then get some returns based on the usage or the revenue the hotel generates. Now that is where these kind of mechanisms start to play out, right? But there's a lot that goes on in between. real estate is not a very fluid system. It is very, very illiquid, so as to say, right? So when we get into the asset tokenization piece specific to real estate, we launched a product which is called Miniland. What we do, Miniland, is not just the technology piece of it, but because it's real estate, we have to build a tech plus a service stack, because a lot of stuff still happens manually on the ground. If you have to go to a local registry office to be able to check a certain document related to ownership before you can bridge it and bring it on chain, you have to have some people going and doing that manually. So while we thought technology could do everything, we had to rely on the service stack. So when we say we bring it together, making it accessible, making it work, we have to depend on both of those, right? So then, while we solve for that, there's a bunch of financial technologies came into play, which is where payments, right? People have to make payments, they have to get money out of the system, right? And that is where that also has to comply with regulations and law of the land, right? In India, you cannot really accept payments in crypto, right? But there are mechanisms where you can make the technology work, you can give what is needed, and you can have an entire process built on top of it, right? So we brought together different pieces of technology, which is from financial technology, which is from Algorand, from blockchain, from the service side, and then we said, okay, now when we tokenize assets, it takes us about less than a week to onboard an asset, which could be as fresh as just going and looking at it onto the chain. And from there on, we have seen that a typical investor journey on our platform is less than about 5 minutes to put some money in and own a piece of real estate in any part of the country. So that's the power of technology and the ease, and that compresses everything from creating an account on the blockchain, on the Algorand, having that wallet, loading up your money with your bank account, bringing that money onto the platform, able to see what type of assets you are, what type of returns you can get, and kind of see the journey to the end to be able to put that money in. The second thing which people ask us, because these are all investors, right? You're not fancied about what blockchain, what technology you're using, but you are looking at two things primarily, and that is the next part of it saying, hey, how much returns am I getting? And when is my exit, right? This is where technology today cannot answer these questions and these challenges, and that is why blockchain is the suitable answer to this, where we say that, hey, today you can invest into this asset. Now, there is a minimum hold period because we want the asset to have enough interest and investments in, but we can give you an exit either via a marketplace mechanism or via market maker system, where if, let's say, today you want to book a year-end trip to Europe or Dubai, you can go click on the platform and say, I can get my investments back, and the real estate pools, the asset pools, kind of liquidate that for you, right? That is what blockchain can do, which no other technology can do today. So while we talk about real estate or any other asset being able to come onto the chain, there are three things which we look at. One is the tokenization piece, where you fractionize, make it accessible. So first is creating access. The second is that internal mechanisms of buying and selling, right? Which is where you get the returns to the people. And the third is getting that investor exit on demand, on the click, which is all powered by blockchain as an underlying technology.
Very interesting. So Tanvi, in your context of fractionalization, UBS, what exactly are you looking at, and what are the challenges? How is technology playing a part? Is technology the driver, or is it regulation, or is it access of money? What is exactly driving there?
I think it's not the barrier in technology. In the last couple of days, I got very close to what Algorand can do, and definitely it's one of the protocol that many would love to build and are building, as we have seen. But nonetheless, and Switzerland being a very comfortable regulations to be in, a lot of the discussions that we are having here have been developed into proper use cases in the last 2 to 3 years. But Switzerland is a very small country. The challenge becomes, how do you scale internationally? So I gave the example of tokenization of structured products, where we wanted to do the issuance from Hong Kong and have the tokenization platform in Switzerland and the wealthy clients across the globe. So to give you an example, we have spent about 3 quarters to get this done, and about few weeks on building the platform and the technology. The rest of it is just getting the legal and the regulatory clearances. So to have a global standard on how tokenization can work and fractionization can help people, for a country like India, perhaps that's not the starting point, but as Vandana said, you are doing this process of integrating Hong Kong and India. This would very quickly become a regulatory nightmare rather than a technology challenge. Technology-wise, we believe we have all the right instruments in place.
That's very interesting, and I think that kind of drives me to my next point, which is, if we've been mentioning Hong Kong several times in this discussion, which is quite interesting, but if we have to scale this up, like there has to be a policy that needs to be informed. We need to be able to make sure that what exactly are the concerns of the government? Like we heard the Secretary from MITI this morning talking about, if we do something which is going to support people, will always be there for you. But then what are the concerns that people could possibly have with a fractionalization real estate, as a matter of fact? And how can we inform these policymakers? So what is the future in your understanding at this point of time in these different areas that you're working on? Would be, I think, very interesting for everyone to know. So I'll get started with you, Linda.
Yeah, sure. Actually, we do work with a lot of governments around the world, obviously very specifically in our niche in travel. And of course, it's not the same for everybody, right? I think we've been lucky because the travel and tourism space was especially so badly affected after COVID that I think they were very much under pressure to deliver to their own people, to their own ecosystem stakeholders, to deliver something new that was going to deliver impact. So we kind of came at the right time, with a really promising solution. And we found a lot of openness, and many different countries and tourism boards around the world have been, very excited to kind of partner with us to try to embed, tokenization, Web3 strategy to their tourism development plans, and again, the tourism value chain. So I think, especially as a founder and as many other founders in the ecosystem, is all about trust and reputations. How can we build positive use cases that have substance and deliver impact, right? So as long as we can deliver on our promises, because yes, the tech is beautiful, but it needs to work and it needs to drive the results, then we can get the credibility in front of those policymakers that can actually understand that this technology can provide real value, so that then they can understand it, so they can design the best policy. So we do, for example, a lot of work with, we've been doing a lot of work with the government of Indonesia, and they've been so excited about these different use cases that we've been building, that now they're interested in advancing a greater use case for blockchain in the country, right? Even across other industry sectors. And I think it's so important, as obviously other also policymakers were sharing earlier this morning, creating the right regulatory environments. Also, the regulatory sandboxes are great, because how can we regulate something that we don't even know how it works? We need to enable entrepreneurs to test and iterate. We don't know what's going to work best. So we're just at the beginning, infant stages of these applications. So it's so important to have that transition moment and actually actively engage policymakers to actually then figure out what are going to be those best regulatory frameworks that can enable a positive application of the technology. I would say that on the regulatory side. I'm happy to share also on the consumer side some of the things that we think are useful.
That's another interesting area which we might talk about when we talk about the road forward. But from a regulatory standpoint, any one of you, I mean, all three of you are working in kind of similar restrictive regulatory setups. What are the challenges that you've seen, and how are you kind of traversing that as of now?
I think it's about interoperability of policy and regulations. We always talk about interoperability of protocols. We hack our way through, many of the technologists in the room, but what we cannot hack through is the interoperability of the regulations. So if you are running a product that spans geographies, you might be able to create a sandbox within a country and go through the challenges, which is the starting point, absolutely essential. But how do you translate one regulation to another? And that's where the lawyers at this point are getting richer and richer in the process, trying to define newer policies, newer regulations, newer set of audit standards. But just like SWIFT as a system is an interoperable system across the globe, we need interoperable policies across the governments. And once that happens, I would see that blockchain technologies and use cases built on it would become mainstream.
That's an interesting, yeah, Saurav, you want to talk about it?
Right, so just picking up on what she said is actually right. I've spent about 2/3 of my time talking to lawyers of what we can do and how we can do it, rather than building the technology. So I definitely agree with that. And what Vandana said earlier, that in India we have a setup of the IFSC, and it's great that you're already leading the space. It will make life easier for a lot of us to be there. But that's actually where it comes to, right? And if I talk about the moment, you have to see that you bring an asset onto a technology system which creates easy access, right? Then a lot of people come in. The the immediate challenge which it creates for a regulator, and not only for the regulator, but as consumer, and we'll hear that, is security of the funds, right? And there's a lot of issues and challenges and scams which have happened. I mean, we'll not get into that. But securing investor interest, that's the top priority for investor regulator anywhere in the world, right? And like we said, that we have to bring between, let's say, Singapore, between Hong Kong, between IFSC or India, between Dubai and going to Europe and Switzerland and even to US, right? We have a very strong foundation of financial, regulations, right? And if I look at it, blockchain as a technology core, it is a ledger. It is at the core, it's a financial technology, right? So I would anticipate that at some point in time, these regulators will come up and say that, okay, we can, look across our geographies and say if an asset has to bridge across different borders, these are the bridging or the mappings that apply, right? And when that comes and that is when they put it on a blockchain ledger, then we can say, yes, if an investor sitting from the US has to invest in a SME asset in India or someone coming from Europe, then probably those streamlining of the processes happen. And then technology takes over and makes the entire operational workflow work. And then the ownership and the transaction histories of everything flows. So that, I believe, is the key factor. And of course, given the technology is new, a lot of people are still learning about it. So that is something on the consumer side. The onboarding of the people, creating that wallet, how do they understand, right? So when we started, we first gave the system open to people. I said, just put some money in and take it out. And they were putting about $1,000, $1,500 or dollars and just putting the money and withdrawing. They wanted to have trust in the system, saying, my money is not getting lost. And these are pure investors. And for 1 week, they said, we're happy, it works, right? And it's good, it's a very fluid system. And that is when we brought on the assets, and then we could close about assets in a week or two's time, right? So getting that investor interest, particularly if you're democratizing assets and bringing it on a public system, is, I believe, one of the key. And that is the confidence we have to give to the regulators, saying, the interests of the investors are secure.
Yeah, you bring in a very important point. I think, policies are formed only when there is some kind of an adoption in the market. And adoption in the market is when we kind of move away from the early adopters and then cross that chasm and then get into the people who actually understand it. Like, the way you buy a cell phone and get started, that's how you would start getting into investing in these kind of processes. So what are the challenges that you see from a consumer perspective, and what are you kind of trying to do to address those kind of challenges? Maybe, Linda, from your perspective, what are any things that you've seen from a consumer perspective, any kind of a pushback, or consumers need to be educated more in technologies like this? Or how can we seamlessly integrate them without talking too much about this technology, but talking about the trust aspect only?
Yeah, exactly. I think, blockchain is amazing for those that actually get it, right? That's the biggest problem. So, from our perspective, actually, the goal is to create such a seamless user experience. The user should not even know that's powered by blockchain. That's the place where we need to get. Because the same way, right now, in Web2 applications, we don't know what the backend server is like, who's managing it. Do we even know? No, most people don't know. They actually have to just focus that it works, it delivers values, and it's better than the next best alternative, right? So that's, I think, what everybody needs to work. Obviously, there are steps to get there. I think onboarding and educations are the biggest problem. And for us, we're trying to abstract all that layer. I think, holding your seed phrases, it's so painful. People don't want to do that. We need to create systems that are as easy and as much easier actually to use than what we have right now. So I think those are the steps that we need to really focus on, and really developing user experiences that are almost trivial.
Excellent. I think we've had a very good discussion, but I'd like to open the floor for any questions, because this is a very interesting topic. And if people have any questions, feel free to please. Yes. There's a person over there.
Hi, my name is Samir Singh. I'm an attorney from the US, also a founder. I have a question for Tanvi. Could you explain to us, for UBS, how your work tokenizing assets is part of the broader corporate strategy for UBS? What is the broader view that your work is a part of?
So we do have a corporate strategy when it comes to digital assets, and buying and selling and giving the possibility for cryptocurrency to the clients is not one of it, which is typically what you would assume as a bank one would do. It's tokenization, it's custody of the assets that the clients already have, wherever they procure those assets from. Because just like we deal with the private clients and they trust us, and trust is an important factor, which bank like UBS plays on, trust us with all of the different assets, they would also consider this different asset class to be trusted with the bank. So we do spend a lot of time as part of our strategy on custody and tokenization for all the right reasons. I think, as I said before, for us, tokenization as a strategy is to manage the overall process and to take the friction out of the process and have the whole process on one chain for traceability, for auditability, and for the speed that you can achieve. So in that context, the strategy is more around tokenization and the possibility of providing a custody to our end clients. And we are not operating in the Americas market at all because the regulatory landscape is not yet clear.
So it's our times is up, and we are the one who's separating everyone with lunch. So I think we can take this discussion offline. Feel free to reach out to any one of the people in this panel. Thank you very much. Thank you everyone for this discussion.